Hello from the children of planet Earth. Hello from the children of planet Earth. Hello from the children of planet Earth.
All right, what's it ready? Good morning. Waking up already to NASDAQ. Lower DD band touch. Market is still crawling slightly lower. Volatility still creeping slightly higher. In the overnight session, we're still decaying that volatility out. We're going to see how this turns out over the course of the day. And this is Friday expiration, so we'll see if this turns into anything momentum-wise, or if this is just a sit-out day from the start. We'll see. Welcome to the stream. Usually these DD band days, when you tap them right at the door, it's one of those days where you know it's going to be volatile and crazy. So can take it easy. I'm gonna trade small. I'll take it easy. Let's walk you guys there. Smash that like button real quick. You know how the game is played. Let's go. Lower DD band tap on NASDAQ. Find it real quick. S&P not there yet. RTY not there yet down there. Watching the VIX. Just such a weird VIX pattern. There's so many people covering shorts at the same time as there's people selling off. It's like a transfer. Up, down, up, down, up, down, up, down, up, down. It's not getting any sort of changes here. So we need an expiration for the month in a week. So this is going to be playing very heavily into that. Market's been pegging that 4,500 level for about a week or so. So we'll see if that continues. Going into today, we're already opening down a little bit the open. Get our stuff ready here. Today, PPI, take a look at these numbers. Michigan numbers in 36 minutes. This has been a catalyst for the last couple of prints. The number has created some movement in the market. So we'll see something happening generally then. It's a this PPI is pretty big relative to what we've had before. Well, in the forecast is at 0.2 and came up at a 0.3. Yeah, so obviously not as bad as the inflationary period we had before, but still, you know, it's showing this is the month over month. Those changes are showing positive inflation. What did it do? What's up, y'all? PVI year over year is kind of flattening out, no longer in decline. This is a little bit of a growth in the PMI in general. Oh, this is sorry. This is not a PMI. This is not today. I was like, that's not today. All right, market up is 5 minutes. Get ready to get started here. That's right. Smash that like button. Welcome everybody. Getting started in 1 minute. Get ready for watch the market open. We're outside the DD band. It's already trading small if I do anything at all. So we're already outside of here. Market's irrational at the start. I'm trying to get my settings here. All right, let's see what we're getting. This open is not really that great. Actually, as a matter of fact, the overnight trading not that great either. We got to see if we get anything good on the prints. The DD bot didn't run last night? You sure? Oh, that's so weird. Well, you should be able to calculate it manually. Bear short up, resistance on hedge pressure. Bear short up, resistance on hedge pressure. So this is a down day again today. Nothing today to long, nothing today to do. Not necessarily going myself, not going to short it from here. Not liking this. Gonna watch the monthly maps in just a little bit. So nothing out the door. We do have DD numbers still finally starting to come down. Still high, but starting to come down finally. It's still in the 80s. So let's watch it today to see what the integrity of the stocks are like going into this weekly expiration. We have a lower DD band on the S&P futures right at about 44.56. Right here. We've already tapped the lower band, so there's already a float failure situation where the market has pressed in the NASDAQ side, kind of below that band on the NASDAQ futures is not what you're supposed to see happening. So this is going to be an unstable market. Anything can happen from here. That's what I'm saying. So be very careful the way I'm trading today. I might take a scalp off a hedge pressure to the downside. I usually don't like to short unless it's off of hedge pressure or monthly hedge pressure from the bottom. Very rarely do I take the hedge pressure shorts, even so, in these transitional days. But if we break hedge pressure to the upside, clearly there's a long setup just that limits itself to any upside move. Then it's probably back down where we start. But open below hedge pressures, close below hedge pressures, right? And this is kind of normally what I look to see most of the time. So upside is limited. So another day that's volatile, probably trading lower. If it goes higher, then we'll see evidence of that. The resilience numbers will come in positive and strong. Then the market might actually trade higher until it's the top of the box. Now, if resilience goes positive, closing through that box can create a hedge pressure break. So this is one of those situations where we're going to keep an eye on this for a couple of minutes. All right. Okay, let's run monthly map and just, oops, this is QQQ. Why do I have it on there twice? Let's look at Russell. I look at Russell and look at SPY. SPY bear long up. Oh, okay. We opened slightly below hedge, so moving towards the upside would be hedge pressure break, arrow pointing up. And so if resilience stays positive, we can actually push through here today and push up higher. Chart along the HG. Yeah, I could definitely do that. I like the idea of the S&P trading higher on positive resilience. That's not a terrible thing. Now we have those Michigan numbers coming out in a little bit, catalyze the market. So I'd be interested to see how that plays out. Actually, things are looking good today for a move to the upside. Actually, am not disliking it. Any hedge pressure break to the upside would be a good sign of this recovery going forward. Now, let's run the monthly map because this is what I was waiting to see. Is that monthly map appearing to be more stable in expiration? Absolutely it is. As a matter of fact, it looks even more stable than it did yesterday. So that bull side is starting to creep back in. And there are some more bulls starting to creep back in over the course of the month. It's interesting to see this transitional phase. It's starting to iron back out with bulls stepping back in. I do like this. This is an interesting setup to see this. You'll see what I'm saying? So the bull side going deeper and the bear side weakening out is still showing that there's more potential upside at some point over the next week. Interesting. I do want to take, now I probably missed this trade, but since we are on a DD float failure, you have to be very careful with anything you do see. The market's going to be very violent in any direction that it moves because it's going to have a little bit of instability here. So any longing inside of here that I'm going to do, I could trade to the top of the box. That would be about a 15-point run if I can get that. Any dip, I think the Nishka number providing a dip, I might want to kind of pop in on. I'm not afraid of missing out on any trade, so if it starts moving up and I'm not in it, I'm okay with that. Just make sure if you haven't checked out the Rocket Scooter Extended Trial, we'd love for you to check out our platform. We are the newest, hottest trading platform on the planet. Tons of AI features coming out soon. We have neat things in the pipeline. Back test, live coaching, all kind of stuff built into the platform. There's going to be things that nobody's even dreamed of in a trading platform. So if you want to support the development, get in while you can and join us as we trek forward building this. We just launched live futures trading with our first broker. We're about to launch live futures trading with Rhythmic. That's something we're working on now, so you guys can do your trader funding programs here inside of Rocket Scooter as well. All right, so that is just one of the things that I'm concerned about. Pressing lower DD band multiple times this week as the market's receiving that unusual selling pressure. It's just something that I don't like to see. Obviously, when you have that DE ratio greater than half and it presses the lower band, it doesn't want to do that. We call that a float failure. Anytime the float doesn't happen, here's what the float is. You see how the S&P is trying to float? It doesn't want to tap that lower band when that ratio is so high and bullish, a lot positive hedging, long hedging. So right here, that's when the S&P floats. But the NASDAQ also should float. It didn't. So when there's a discrepancy between what the futures of the index is doing versus what the sum of the stocks are doing, you're going to see the market's going to be very unstable. Whatever you see, don't put a lot of stock into it. Like the market may be tricking you, like, okay, it's going to rally, and all of a sudden it turns around and drops really quick. Usually those float failures come with onset volatility. Volatility is building up a little bit. We had a really cool volatility lesson yesterday. If you guys tuned into that, that was pretty fun. How'd you like that? Res is low. No, it's low. It's low and it's not bearish enough. It's not terrible. But man, it's just going to be one of these days. The market's going to need a catalyst and squeeze out shorts for a day or two. What I'm hoping to see is one really strong green day or two to revert to mean at some point between here, and we'll catch it on the ride up. Oh, I got to be on Spaces today. Totally forgot. Hold on. Got that we're on Friday now. Hold on a second. Give me a second, you guys. All right, we're going to take a look at those Michigan numbers when they come out today. So 17 minutes, the Michigan numbers are coming through. We'll wait for those. It's usually create a catalyst in the market. Resilience being negative, showing that downside, resisting the box down the S&P. So this is not something I'd want to long on right now. I'm not going to bet on this hedge pressure break with res being less than 0. So things are probably going to pull back a little bit. I am good, comfortably sitting out on this. I still don't want to short anything, even though I can predictably see it's likely to go lower. Kind of wait out for market conditions to change. It'd be more... Yeah. Resilience is a godsend, dude. Resilience is one of my absolute favorites. Appreciate that. Yeah, like just basically when everything shows up, then I go up. Like let the market trickle down, go lower. That's my philosophy. It's your conscience telling you to chill when you want to do something stupid. Yeah, like right now it's pulling back and I'm like, should I take a long? And then most people might want to try to buy the dip, and then we're kind of like, okay, let me sit out on this. Hold on. Gonna wait for those Michigan numbers to come out. Okay, I'm just gonna wait probably and see what happens at 9. See if there's any kind of change, anything moves off of this, but it's not looking too hot today. Is anybody here doing anything good? Let me pull some charts real quick. I forgot I was supposed to be on Spaces this morning. It's been a long week. Yeah, for the first time, the DD ratio has been pulling off of the high 90s. It's still in the 80s. So what the number is, it's we do this aggregate, which is the percent of market cap that's getting that positive gamma hedging versus that's getting negative, and we're still 80%, which is why the market is still kind of floating lower instead of collapsing lower. It's falling off of the 90s, but it's still up there, right? It's still 80%. It's just weird. So despite the selling, there are still stocks that at some point in the next couple of weeks, they're still going to get that hedging, probably leading up into a catalyst or an event. I mean, there's going to be a revert to mean in this downside for sure, in my opinion. Precipitously? Ooh, I love that. So I just shared a link at the top. If everybody, by the way, we live stream on YouTube every day. So I want everybody to do me a favor, if you want, go click that link. I'm actually live now. You can watch the platform. Hop in chat, type in a ticker, and I'll give you free chart, run hedge pressure for you, and show you what it is, and show you how the liquidity maps work on it, and let you see whatever it is y'all are looking at. Anybody's trading anything, just come on in, check it out. So the link's at the top. We're live now. So for SPY itself, it's just looking at the SPY options independently of the underlying inside of the index. So it's looking at the specific risk just for SPY. Meta, Google, let's run some. Okay. You know, I still need to go in there and double check Meta. Meta's the one ticker that we have that's weird since the name change. What's up, everybody? All right, let's do Google. All right, check out Google really quick. Okay, so liquidity map, if you're not familiar, is going to show me where the pressures are coming from the options landscape that exists inside of the market. So Google, for instance, the liquidity map is showing me that Google has a pressure that's pointing to the center of like this no man's land zone right here. So Google has, it's not bullish, it's not bearish, it's more likely to drift lower rather than higher. See how that works? Coin levels? You mean Bitcoin or coin the ticker? The Coinbase. Same thing. These mean reverting trades right here. So essentially, if you see how liquidity map is drawing these arrows to show me where the pressures are pointing to, I utilize this to formulate what I think is going to happen for the day. So one of the major features of the platform is showing where that positional risk is. And that pressing towards the middle right there is kind of what I'm seeing. So it's neither bullish, neither bearish. And you see how it's just kind of floating to the middle. Pretty neat how that works, right? Okay. NVIDIA, double check. Now, we also have another feature called monthly maps. And I'll show you how this works too to plot out what like NVIDIA is doing over the month. Let me make this full screen really quick. So in a liquidity map, you can see NVIDIA is smashed between these yellow and blue lines like this. And it's also in a bear zone. So NVIDIA has downward pressure from blue to yellow, and then yellow could be a bounce to blue. So something that just trades down here off of the open price being resistance is likely to drift lower rather than higher. The high of the day inside of when you're opening in a bear zone, you tend to close over here as well. So high of the day is probably limited to here in NVIDIA. So people selling calls likely usually will sell calls up in here. The likely path of NVIDIA is to drift lower, and there's going to be a support there, high of the day there. So all of a sudden, we can look at the pressure, say without a catalyst, the market's likely to sustain the same kind of movement. Now with the monthly map, it's going to allow me to see the future. So monthly maps project in the future where the distribution is over time. So this is NVIDIA and what NVIDIA looks like on the 4th of September, basically up until then. Let me go ahead and show these. Wait, hold on. Friday only. Hold on. We're going to go out 1, 2, 3, 4 weeks out. Okay. So 4 weeks out from here, you see how the way monthly map works. And again, I'll give you a lesson on this later if you're new to the stream today. Welcome, by the way. Thank you for joining the stream, everybody, if you're out here from Spaces. Anytime this top area being a bull zone, this bottom area being a bear zone, this is what we look for. We look at the space between them to show where the market's neither bullish nor bearish. At current prices, NVIDIA actually, at some point over the next couple of weeks, still stays bullish, despite the selling off. There's still bulls ready to long NVIDIA through here. When the bear side is sloping down like this and just running away from price, it means shorts are covering. So over the next 4 weeks, NVIDIA, actually, when you look at this particular stock, is going to get genuine longing from the delta hedging of those in the money calls. So longs are going to long more and shorts are going to cover. So NVIDIA actually somewhere inside of here over the next couple of weeks could get some bullish run. So what we keep saying is when we're looking at these monthly maps, a lot of us are forecasting that somewhere in here, the market does definitely revert to mean. And that downside is not just going to collapse out under our own feet. A lot of the stocks are showing that, by the way. So I'll give you another one. Somebody said AMC. Let's see what the AMC map looks like. So this is forecasting the future because these are where the positions are in the future. And you can see with like penny stocks, like AMC, it gets a little weird. AMC is like neither bullish nor bearish. And the idea that bull side is moving really high like this, it's getting more and more volatile. AMC is done for. It's dead in the water. Okay. So Melly. Yeah, we teach classes on how to read this. This is a really cool, it's a brand new way to read the market. We automate on here so that you can see where those pressures are drawn. These little arrows allow me to find places I'm looking for. So right now, if the open supports, I trade to next resistance. If the open supports, I trade to next resistance, which is there. Not much off of that one. If open dips, then I take support off of yellow. And of course, yellow is very far down. These are hedge pressures that we keep talking about in the spaces. Hedge pressure is the net maximum gamma of all options sold to market makers. So it's the highest order flow. So it's predictable high volume spike. So what we do actually is predict where volume will be, and allows me as a trader to isolate my activity to just places that matter. See, today, like a lot of these days to me are just like no trade days. So having rules to sit out and kind of take it easy is what I'm kind of doing. So if the Michigan numbers come out in 2 minutes, when the Michigan numbers, I'm going to look for some kind of trade to make. I'm trading S&P futures right now. So obviously that'll catalyze things. Nvidia. So what we can do is if you're day trading, Nvidia, sorry, we do like snow. Okay. So if you're day trading, right, liquidity maps is what I use for day trading, and monthly maps is what I use for swing trading. Putting them both together. You have a monthly map for this? Enough. Oh, let's get ready for Michigan numbers. I'll circle back here. Snow, just like everything else that we've seen, mean reversion, and there's no bullish, no bearish, kind of stuck in the middle. All right, so staying on top of these Michigan numbers, they have been a catalyst over the last maybe 2 or 3 readings of this. People are very sensitive to any bad news right now because, you know, the credit rating downgrade is kind of big. That immediately disintegrated the monthly map on the S&P, where we thought the market was rallying until October. Now we have hints that the market's pretty much done for as early as September. Until the bulls decide to step back in. The only bullish hope I have is this right here. Okay, look at the Michigan numbers coming out. Looks like we're moving on that. 2.9% down on the inflation expectation here. On the fiber, that's down. The actual consumer sentiment, 71.2 over 71. So resilience definitely positive. That's looking good. So just showing you guys what I'm doing, what I've been working on. Let's open up SPY monthly map really quick. So we're gonna let this do. The market's gonna move higher today. I have some mid-September 466 calls that I've been working through last couple days. So this is my trade to revert to mean. I'm not going to try to get them in the money, but they're long enough that 1 or 2 really strong green days that we get will kind of lock me in maybe 200-400% profit, and I'll be really glad to take that. As monthly map is starting to disintegrate, I still know that we have this growing bull side in the S&P that does show support and bullish hedging that's very possible. So anything between now and here. So I got about a month or so just for another wave up. What could possibly create a short squeeze? Well, we read something called the commitment of traders that just shows that people are short the market. In the S&P, they're very short. The Nasdaq, they're very short. If the market just does not wind down fast enough and this DD number is bullish, see this right here? This ratio, let me show you how this works. We have some infographics that'll help you. We have 3 really strong indicators. Everybody that's tuning in for the first time, these are going to be really cool. Let me yell this on Spaces real quick. So So we have 3 major indicators that we do in our program. They're called the Big 3. And let me show you what our program is. Those of you, we train on everything here. In our Discord, we have a boot camp that everybody can go through if you actually join the program. The program is really cheap. It's $35 a month for 3 months. It's normally a $200 a month subscription, but it comes with your platform, your live trading data feeds, sorry, your live market data feeds, and then access the Discord, all the levels, the boot camp. Like I said, $35. It's really cheap. You guys want to learn how to trade? You want to learn how to trade the way we trade? I'll walk you through this. So inside of here, the boot camp has 4 lessons: risk management, like when to sit out, when to trade small, how to do entries, how to do exits, and we give infographics and videos and make it kind of easy to just dive right in. There's 3 entry rules that we mostly use. The number called DD at the top. We use resilience, which is an indicator over here. And then we use something called the liquidity map, which is these arrows that are showing the direction. Now let me put SPY just kind of front and center at the top and kind of detail some of the things for SPY. Let me add the resilience indicator at the bottom so we can see what it does. Now I'll show you on the infographics what these 3 things mean. First and foremost is this DD ratio bullish number. It's printed at the top of the chart, so just remember it's 0.84. That's very, very bullish on that. And on the infographic, if the DD ratio is bullish, it shows me relative to the zones what can I expect in the market. So an example today, I'm going to put this off to the side. So we make these little infographics to make it very easy to see. There's a bear zone and a bull zone. We're in a bear zone and there's a bull zone. With that bullish ratio, what it says is if we open in the bear zone down here, which we did, the highest I expect for the day on my personal trade would be a bull zone tap. So the market limits upside to there. But at least on a really strong bull move, it would try to kiss that, and I wouldn't long any further than that. So risk management is going to keep me from jumping in and longing at the wrong spot. So I know if I'm going to take a nice, decent long from here to trade higher off those Michigan numbers, especially off of a hedge pressure bounce, which we always love to take, my reward is pegged to here. So now I have 40 points in the S&P or 4 points on SPY, reward to 1 point of risk. Now I can map out a 4-to-1 trade already. So this allows me to map out actual risk and reward for every trade I make, which is to me something that I've never been able to do. So that's why we made this platform. Always having to just know where my exits, where my entries are every time I make a trade. That's why we made Rocksecure this way. Okay, so now I know I can plan a possible trade. I'm going to just show that this is possible. I'm gonna leave that line there. The next tool we have is something called resilience, and this has to do with where the market gaps up or down. Today we gapped down on the S&P, so is the S&P going to fill its gap back to yesterday's close or not? Resilience is another thing that shows pressures inside of this box. This indicator is at the bottom of the chart, and if resilience is above 0, which is this white line, clearly it's above 0, then the chart tells me what to look for. Inside of the box, with resilience above 0, we look for it to push to the upper side of the box, which is what it's doing right now, which is a trade from here to there. See how the pressures are lining up? Exactly what we see on the indicators, exactly what we're seeing on the chart. Last but not least, the liquidity map, bear long up on the S&P. Hedge pressure support trades to next resistance right here. So hedge pressure support trades to next resistance. There's one and there's another. We usually use the box as the resistance itself. So now, if I were to add all this up, I can see that on this catalyst, the market's likely to do this, 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 and probably settle out in there today. Okay. What from monthly mapper Rocksecure, what can cause a short squeeze is that you're losing that short pressure that's pushing the market down. So what monthly maps actually do is they show you where bull and bear zones are extended into the future. So this is like all the way until August 18th expiration through here. So as you see, these are bull zones all the way through here. So price being anywhere inside of here is going to get in the money calls, pushing it higher as those calls are being hedged. People that sold those calls need to long the market. The idea is where price is trading right now, there's the majority of the S&P puts are out of the money in the near term. So you're not getting, like, if you were a put seller and you sold a put to somebody and that put goes in the money, you have to go out there and short 100 shares, right? Because somebody is going to sell to you and then you have to buy to cover your short and flatten out. So When puts are in the money, it forces people to sell. When calls are in the money, it forces people to buy. So we look into the future and project exactly what we see right here. There's still batches of calls in the money more so than puts. And the puts are getting further and further and further out of the money on a short term. So the further out of the money, the deltas are lower. Therefore, there's less pressure on the short side. So that lessening pressure on the bear side, that growing long pressure on the bull side is what can create a short squeeze. And so what we also show is that there are fewer and fewer bears over this small period of time, but they step back in over here. You can see that bears are going to be willing to cover, and the market's likely going to trickle down and become more bearish in periods like this and more bearish in periods like this. So like September is going to have some downside because price is in bear territory or close to bear territory. But at least for this wave, we have some bull territory here, some bull territory here. Market's going to be choppy. So you can easily, if you read this right, you can see that the market's likely to go up, come down, go up, come down. It's not going to collapse like the bear voice out there is saying. Market's likely to do this over the next couple of months. Trade up a little bit, maybe 1 or 2 days, continue to slam down, crawl its way up, continue to float. We're likely to stabilize through September rather than collapse. It's not bearish, it's not bullish. See, as price were to hold the same between now and the end of the year, like all of this area, there's no bull zone, no bear zone, nothing. It's really hard to guess what's going to be there. If there were all bear walls through that, like these light gray ones, then of course I'd be very bearish. So right now, it just shows the market, after this volatility subsides, the market's probably going to hang this 4,500 for a little bit. You see that? Okay. All right. You guys have any more tickers you want me to look at? Y'all threw some else out there. Socks. Okay, let's go. SOXX. Is that what you wanted to do? We'll have monthly options for this one. No liquidity map for it. Actually, interesting to see, just like other things, the next couple of weeks, there's still a little bit of bull side and bear side is still liquidating. So it still shows a little bit of upside in the market. Just for a week or two, there's a possible revert to mean inside of here. That's what I like. Back to your tickers. TH, Kevin, Moriarty. All right, cool. So everybody do me a favor. Go to our Discord. Join up. We're going to do a Zoom call today. I can actually train you guys on all of this. We'll have a little public Zoom call. Go in the Discord. Send me a message there. The link is in the description. And I'll send you all an invite to come to the training today. We're going to do a Zoom call. We'll train on all of this stuff. Now comes the question, do I actually want to come in here and trade SPY right now, what I see? Oh, that's funny. They're talking about... Yeah, sorry guys, I'm gonna let you guys know I decided to quit trading for a living. I am now going to apply to UPS and become a truck driver for UPS for $170,000 a year. That sounds like a fantastic opportunity. Gotta ward off that inflation somehow. Wait, the link is expired? Oh. Let me check that real quick. Thanks for letting me know that. I did not know it was expired. Hold on. Really? Valid link. Oh, weird. Hold on. I'm getting the same thing. Hold on. That's really odd. Oh, shoot. All right. Looks like we lost one of our server boosts. Hold on. Somebody didn't. Somebody used to boost the server, stopped boosting it. One more boost to level 3. Okay. Anybody out here want to gift one boost to the Discord? If y'all want to. Do a favor. Y'all have Discord boosts? Or I can go buy it. Hold on, let me see if anybody has one real quick. Shipping's costs are gonna skyrocket. I know, right? Let me get you guys another link really quick. Hold on. I'll just have to go pay for it if somebody doesn't want to. I think I'm boosting like 10 of the boosts already. Oh, thank you. Oh, I love you. Whoever did it. Thank you. Whoever did it. You're the best. Okay, now I'll try the link. Awesome. All right, now I'll try that link. Okay, let me try this really quick again. Might take a little bit to turn on and active. Link. Okay, give me one. Let me get you guys like a. Try this link here. I'm gonna type one in chat. Try this one right here. Yeah, let me edit and add the new link. Okay, now the old link should work. All right. Or use that one I just threw in chat. Okay, cool. There we go. Now the link is working. All right, cool. All right, market's still trading up. Remember, resilience doesn't lie. We talk about this all the time. Gotta love that resilience indicator. She's gorgeous. Market moving very good on this. Here. Remember that line that I drew yesterday, trading through the box? That upside looks really nice. That was a really nice little play there. I didn't take anything today. I just kind of sitting out and watching this one. But it is looking good. I do like seeing that this revert to mean kind of move off of yesterday's sell-off is still active. Let me add resilience real quick. Let's add these right here. Okay, so you guys see how on the infographic it's pretty cut and dry on how this works. This resilience right here. Inside the box, press to the upper side of the box when resilience is greater than 0 and that white line's clearly above 0. Resilience is that one cautious indicator that I have that lets me not make something stupid. So that's pretty gimme right there. These are pretty easy to see. Like I said, the market's likely going to push up to about 447 and pull back to here. We like to be very accurate in our analysis. So this is a really nice textbook play. Discord requires phone verification. Yeah. These days, that's for your safety. That prevents like people from, you know, millions of bots from like trying to DM you every minute. You just joined the server. You're about to quit your nursing job to be a driver. That's some hella good money there, right? All right. So all it takes is any kind of catalyst to shake the market higher. I'd like personally to see maybe 1 or 2 really strong green days in the middle of this. Yeah, that's pretty good. I mean, I would probably be done for the day too if I got a little scalp there. Is the DOM better than a footprint chart for reading the flow? I'll be honest, I wouldn't use the DOM to read anything anymore. In the modern day, the DOM moves too quick and has too much information that is not even accurate information. I mean, this is where people want to buy and sell a lot. This is spoofing market makers. It doesn't really reflect the sentiment of buyers and sellers. If you want to read flow, there's some other software out there that does order flow, like Black Box Stocks and Trading Ticks are pretty good at that. Or if you want to learn the style we teach, we predict where flow will be. Let me show you something really cool. You want me to blow your minds? Our software is one step ahead of flow. We can predict where unusual activity will be before it happens. This will give you a leg up on everybody out there that's trading this stuff. Unusual activity, hedge pressure is guaranteed unusual flow. Open and close, unusual flow. Anytime you get close to open, close, half gap, any of our lines, you're going to start to see the market respond to it. Let me show you a couple examples. So you see this right here, pressing through the open. Now again, that's a catalyst, high volume spike. But anytime that you approach hedge pressure, you're going to see there's a volume spike. Unusual activity comes out of nowhere. Normally, the orders, the volume is in decay over the course of the day through lunch. Picks back up at the end of the day. But you see as you interact with hedge pressure, there's a spike in volume right here as you get close to it. Your unusual behavior takes place here. There's going to be unusual activity predictable there. Our algorithm can predict volume before it happens. First in the world to do something like this. So if you had a program that's trying to read the tape or read the flow, you'd see right here that activity starts to pick up. Look, as you're breaking through this hedge pressure level in Qs, you hear everybody talking about hedge pressure on the spaces. It's just guaranteed volume flow. On the S&P, as you see, every time you're interacting with hedge pressure, you see these unusual volume spikes. You can't not see this, like right here and right here. Look, the market's barely even moving, and there's huge volume spikes, right? And that has to do with predicting unusual behavior. We use options to pinpoint and find that. So like if I were to look for any stock, let's just put some random stuff in here, Apple. Any stock that interacts with its hedge pressure is going to have an unusual volume spike. So if you put any kind of flow or tape reading next to Rocket Scooter, you're going to have both layers of the market. Look when you're trading around or through hedge pressure, there's just unusual volume flow right near it. Like as you get right here, volume spike, just pressing through it, huge volume spike, right? So the idea is, as a trader, I just want to trade at places where it makes sense to pivot. I only want a long where there's going to be volume or short where there's going to be volume. If I know where volume is going to be, I can avoid trading at random spots of the day. If that makes sense, right? Carson Moore, yeah, let's go there. A couple more of those. Well, that hopefully answers your question, Mendy. It's in this kind of mean reverting setup. So what this means is that I look for the middle of this range to be where it wants to press to. If we support right here, pushing to the middle, about 17.5 is the upside today on Ionic Ribbon. You get really fast at reading this, but the cheat sheet is here to help you see it faster. Same thing. You see how it presses from wall to middle, wall to middle. There's that middle area of the range. There is support off of hedge pressure, and there's that unusual volume spike like we always talk about. Hedge pressure is predicting where volume will be. This is the one thing that we do that's different. Most people try to use analysis, like chart analysis, to predict changes in price, right? And it usually works half the time. You can't predict the stock market's direction, but what you can predict is volume very accurately. Anytime you touch hedge pressure, there's a volume spike right here. See right here? The idea that I know volume is here, it's the ideal pivot. So I don't care about anything else other than these interacting pivots here as a trader, right? So I want to find where volume's going to be. And if I can map out volume before it happens, then I've got a leg up. I'm not trading at random spots. A lot of people here, they understand that. Go through our program. BROS is trading up to a next resistance. We got to find that is. So let me go ahead and go to a daily chart. This is any gap fills in here. So this is one of those interesting setups that doesn't have any upside limit. I'm going to just mark there's a gap that needs to be filled about right there. There's nothing in the way of this. So this is actually looking pretty clean today. And there's an upside gap fill right about 38 bucks. So if one were to be bullish in a bull zone, this is like a swing trade to 38 if I were wanting to trade this. Okay, a couple more. Somebody said Eton. Some of them we don't have weekly options for. Let's see if the monthly map has anything. Oh, it's some penny stocks. If they don't have options, a lot of them don't. If they don't have options, liquidity maps are built off of options. So if there's no options there, we're not going to be able to effectively read anything for it. Or, yeah, you guys come to the stream every morning. We do this free every day. Make sure you subscribe. Click that sub button every day. I'll do these charts for you guys. Maybe I'll start doing them on Twitter as well. Like, you know, posting charts every morning. We'll have like a Twitter feed that you guys can subscribe to or something, and maybe I'll get somebody to drop charts for everyone for $5 a month or something. You can pay their salary. We drop hedge pressures and stuff for you guys all day long. Oh, no problem. Yep, do this every single day. So y'all are always welcome to come through here. I'm live trading, so I come in here and fire off my trades, trading futures. We just launched live futures trading in our platform as well. So now you can connect to Edge Clear Futures Broker and trade your live futures account. We're about to open up trader funding programs in the next month or so also. So you'll be able to trade like ETF or any other trading funding program, trader funding programs with our platform. Okay. Look at now. So Mara, it's not bullish, not bearish, and as time goes by, it becomes slightly more bullish, slightly less bearish. Most of the stocks are starting to look like this. So with a little bit more downside, there's going to be some hookup in the next couple weeks on a lot of these stocks. Now today, yes. So let's keep watching. So Mara right here, right back to that. Hedge pressure to hedge pressure is typically a these are pivots that you can look at when you're trading. Hedge pressures are pivots. Monthly hedge pressure is the monthly options. The blue one is the weekly options. So right now, it's just pressing towards the middle of this range, as you see. Let's see what the Qs are doing. Qs are hitting its hedge pressure right there. SPY breaking outside the top of the box. SPY filled its gap yesterday and is now pushing higher. We know with the DD roll that 447.5 is where I'm looking for my high of the day. Remember today we drew this plan out. You know, said if I break hedge pressure, that's the highest we're going to expect to see. Hold on one second. I gotta do something real quick. Okay. We love you guys. Thanks for supporting the stream. Thanks for subscribing to the stream. Y'all are amazing. We really want you all to check out the platform. At least come through with come through and check out the boot camp that we're going to be doing. This is something that we're really proud of. Okay, one second. So everybody make sure, just go to the Discord and join. There's like an ask for help channel that you'll see. If you actually subscribe to the platform, you'll get the Discord open up automatically. Our bot will open it for you. But just wait around, and in that ask for help channel, we're going to post that link to that Zoom call we're going to do. Do you have any go-to financial pods? Actually, there's like the ones I like. Obviously, we're big fans of the Trading Camp podcast. They interview a bunch of your favorite traders, and every week they do somebody new, like some big name in the industry. And I've actually been on it once. I've been on it once before. They also have another morning show I've been on called Beat the Bell. Those guys are great. I like Confessions of a Market Maker. That's a cool one. I like any podcast that interviews a trader and talks to them. I try to avoid a lot of the podcasts out there that are like, I guess I like to say, what I call it, like confirmation bias machines. There's a bunch of people out there who are just perpetually bullish and perpetually bearish, and they approach the market with a flavor of what they want to see happen rather than an objective look at both sides. And so I hate that's the equivalent of like picking like CNN versus Fox News. You know, it's like I don't want to digest the market from the biased opinion of somebody who wants it to go in a direction. I like to keep it open-minded. That's why I like to listen to podcasts that interview a bunch of traders, so that every week I can get a different flavor of different people looking at different ways. Everyone talks their book, yeah. Yeah, the boys all about working hard. Yeah, I love those guys. You like the lo-fi music? Oh, cool, yeah. I dig the lo-fi music, man. Anytime I play video games or whatever, I'm always jamming to like lo-fi chill stuff. The Compound and Friends, try to watch every week. I've actually never heard of it. I'll check it out, Carson. That sounds cool. Normally, like in my normal day, I'm listening to like metal, rock, EDM. I listen to everything. But like on the stream, you can't like not have fun, listen to like lo-fi pop covers while you're trading. Gotta kind of keep it that drinking a martini by the pool vibe. It's Josh Brown from CNBC. Oh, okay. Oh, yeah, I like him. He's good. All right, so here we go. So the market's still pushing higher. Resilience is still positive. Half cap's still looking to be support. Hopefully this hangs in there for the day. I didn't make any trades yet. I don't like to trade off the catalyst. I like to let the market just stabilize and do its thing. Let's look at the VIX really quick. Obviously, this is something that's been bringing caution to my analysis the last couple weeks. The VIX is just it's a weird VIX pattern. It's really, we talked about it yesterday in the Zoom call. It has to do with the sheer amount of shorts and longs both exiting positions at the same time. For every bull that's dumping for profit, there is a bear that cannot wait to get out. You guys see how all those volatility spikes are decaying? Every dip we get, there are bears covering. Every high we get, there's bulls selling. So the volatility is like not growing higher because the market is sustainably liquid. In a weird state, when bulls are selling their position and bears are exiting their short, you have a buyer and seller find each other, and that's called liquidity. And that surprising liquid state is showing just a general decline in the VIX, even though we amped up a little bit since the market catalyst we had on the credit rating downgrade. We can all see that the VIX is just not sustainably showing a market crash. It's a really neat stasis. We saw another one of them like this during COVID. This is a great example of how when I train you guys on how to trade, you're going to see the market different than anyone else. I went to engineering school, so I look at stuff from the perspective of it needs to look good in the data or else it's garbage. And so to me, data is everything. At the peak of the COVID rally, this green line is the asset manager position in the S&P futures. And they were starting to sell when the Fed announced they were going to do rate hikes in QT, and they started doing rate hikes in here. So for 6 months, though, the market still sustainably moved higher, which was weird when the longs were dumping their position in mass. See how everybody was, the net long position of the asset managers and futures, S&P futures, were going less and less long. They were dumping their shares to market or dumping their contracts to market. People were liquidating the stock market. But because this blue line, the hedge funds, were covering their shorts at the same time, this was people that were, during COVID, starting to short on a big market crash, and they were getting squeezed years later. So right in here, the people that shorted that we would, new president would shut the economy down and then we wouldn't get a vaccine, but oops, we got a new vaccine and Biden had shut things down again in the new year. Then all the people that were shorting the market right here got squeezed. So the shorts covering are actually buyers. Enough buyers from shorts covering was enough to ward off a market crash when people were selling their longs. And people are dumping their shares. Shorts couldn't get out fast enough, and the market still rallied for 6 months. Isn't that crazy? It only starts to sell off when everybody is selling. If the shorts shorting and longs selling, then you get that illiquid volatile sell-off, right? So the neat thing is we're kind of in a state like that where despite people selling on obvious bad news, the market is not going to just immediately drop like a rock. It's got to exhaust that short covering before it turns around. This is a great way to see the market. We're kind of in that boat right now. The market it's only have a couple weeks of data. We don't have a lot to look at just yet, but why we're not seeing the market collapse, it's evident in that volatility pattern. I'll show you back in COVID, actually back in July of 21 till December of 21. Let's go back to that. Can I go back that far? Oh, I can't go back that far on the hourly chart. Only back in daily chart. Let's go back to October, November. This is 23, 22. This is 21 right here. It might be hard to see it, but do you see this pattern right here? I'm going to draw where it was similar because I wish I could see it on hourly charts. And you see that? That's what we're dealing with. And in December, that's what we were dealing with. And that's what we were dealing with. You'll see that how the volatility is just weird. It's very common to look like that in periods of liquidity during bad news. This is clearly a pivot point in the market. The market is clearly going to stop rallying at some point. It doesn't mean it's going to stop rallying from here, but you might see how in these periods leading up to, this was that period up till December of 21 that the market was still squeezing despite everybody selling. Everybody selling was creating higher periods of volatility like 23 and 25, things like that. But you see the VVIX itself, or the span of the volatility, gets very wide during periods when large amounts of asset managers are selling, which should create volatility, but there were shorts covering just as much. So it's keeping things stable and in check, just like this is keeping things stable and in check. Right? We're foreshadowing something right now. And reading volatility is such an important thing. So the market, again, is likely to do this, and bears can be like, I don't understand, I don't understand, I don't understand. But at some point, you know, it's probably reaching its end. We still, if these shorts decide to still cover despite any selling, that liquidity will keep the market from collapsing. And that is kind of what we're seeing. This little data point right here from left to right. Let's go. If you look where this blue number is, this is now, again, this is 2-week-old data, the 24th of July and the 31st of July. It's a week old, right? So it's reported a week late. We went from minus 403 to minus 382. So this was 18,000 contracts covered. So buyers. So shorts actually, the first dip they got, shorts are covering. And that's what we're seeing. And then, of course, in the actual, right, in the actual day-to-day trading itself, you can see that every single dip, there are shorts who cannot wait to get out of this market and cover their shorts. So the mechanic of, I think the bad news is going to collapse the market, is not how things work. We use Rocket Scooter to forecast when that's going to be. Clearly, the monthly maps on Rocket Scooter are showing a revert to mean kind of trade before we turn around and come down. Isn't that cool? And we've been saying that all week while everybody else is perma bear. Market's collapsing today. We say we're probably going to run bullish until monthly expiration. And so having that good layer of sentiment, reading options and reading where the risk is in the market, is a brand new paradigm to trading. That's why I invented this. Do I ever look at average to range for SPY? No, never. I do not use much technical analysis or methods that look at the shape of price, like candle shapes or high of day, low of the day kind of thing. I don't ever use historic price to forecast what price is going to do. If you know my trading style, I don't even look at the history of the price. I'll trade SPY today without ever looking at yesterday. Every day, the liquidity map is what it is. I trade what I see. So, while it's not a terrible idea, I personally don't need it. Yeah, great question though. All right, you guys, let's see. Kind of calling it a morning. Thank you guys for being here. Make sure you like the stream, leave a comment, subscribe. Go to the Discord real quick. Like I said, at noon Central, we'll do a little Zoom call for everybody. No, I'm sorry. Noon Eastern. Let me change that to noon Eastern. We'll do that sooner rather than later. So in about an hour and 20 minutes, we'll have a Zoom call. So everybody, everyone in the public, be welcome to come to that. We'll have an open-ended Zoom. We'll give a demonstration of the big three and all the trading styles here. Okay, nice little easy day. I think for most people, this trade up to bull zone, bear zone right here is pretty much what was expected. There's really nothing else to cover. We take what we can get, walk away, call it a day. This was a pretty nice, easy to see. Resilience is positive. Half gap support. Now we're outside of the box. Top of the box is likely to support, and the highest I'm going to look for is that 447 level today, and we'll see if we get it. Okay, we love you guys, and thanks for tuning in. We do this every single morning, so feel free to come any single day and come check out what it is we do. We love you to death, and thanks for tuning in and being part of the Rocket Scooter family. Fastest growing trading platform probably on the planet. We're huge. We almost have 5,000 people in our first year. 5,000 user accounts. Huge up for us. We've been pressing and creating new things every single day. We have so many new features coming down the road, like AI back testing, automated journaling, rule assist that helps you remember your rules. Anytime you try to make a trade and break them, will pop up, tell you you're breaking your rules. All kind of neat little things that nobody's done before. True risk management themed platform that's going to give traders the edge in their planning that they've never had before. And we're glad to have you guys part of this and supporting the team and the drive as we develop this awesome thing that everybody has wanted since we all started trading. We'll see y'all later. Click the Discord link, go in there, and in that Ask for Help channel, we'll post that Zoom link and everybody can come. An hour and 15 minutes. We'll see y'all live.